Physical demand helping gold prices. We'll be talking about this with Peter Hug next. Peter, thanks for being with me.
You're welcome, Daniela.
Peter, last time we spoke, you were going long with gold in the high 1320s. Is this still your position or has it changed?
No, I put a blog out on Friday that I was still long that position with a stop at 1388, I believe. It might have been 89. I've raised that stop. I'm still long the position, but I've raised the stop to about 1408 on a closed basis. As long as gold stays above that level on a closed basis, I'm going to continue holding the long position, but obviously I want protection on the downside. I'm looking for 1427 to be breached on a close, which I think will create some short covering demand and possibly take gold initially to 1450, possibly as high as 1470. But on the downside, I've got the protection in at 1408.
So Peter, we're seeing a bit of a recovery happen here in gold. What's contributing to this?
Well, I think there's a number of factors. I mean, from a fundamental perspective, we had some disturbing news come out of Spain and France over the weekend. Their budget deficit targets that were imposed by the EU were missed on a broad basis by both countries, specifically Spain that had a target at 6.3 and they came in at 7.1. So I suspect the Europeans, as I mentioned over the weekend and again last week, I don't see the Europeans having any choice but to start to stimulate the economy. The austerity programs, I think, are going to create massive social unrest in those countries. Added to that is the physical demand. There's been massive physical demand for both silver coins and gold bullion coins over the past 2 weeks, especially since the drop. And I've urged people to be very careful here on the physical market. This is not a supply issue. This is a production issue. And, I don't want to get on my soapbox here, but I think it's abhorrent when I see dealers in the market, charging premiums of $10 for a silver maple leaf and eagle. I just think that's disgusting. This supply shortage will be remedied by production. It may take a month, it may take 6 weeks, but the premiums will then come down to more realistic levels between 450 and 550 for these coins. In the interim, there are plenty of 1 ounce silver product in the market. For example, from the Australian Mint, the Austrian Mint, where the premiums are much more in line with the silver market. It makes absolutely no sense for me for somebody to pay $10 an ounce for a silver eagle, which is in essence a 50% premium to the silver price. I just think you should reconsider.
Peter, I guess the fear for many people is that if they wait 6 weeks, gold prices will be higher.
But again, it's a matter of what are you buying? If you're buying the underlying commodity because you're worried about the global issues, or if you're buying the underlying commodity because the price is cheap, you're buying the underlying commodity, which is 1 ounce of silver. To pay a 50% premium for that commodity makes no sense when there are other coins and other bars in the market where the premiums are more reflective of normal market conditions.
So, Peter, for someone shopping around for coins right now, what's your suggestion?
If you're enamored for some reason with the silver maple leaf or the silver eagle, again, to me, it's 1 ounce of silver. Wait. There are dealers that offer, other solutions where you can accumulate silver and then wait for the premium to come down, and then you can swap your silver for the coins at a more realistic premium. But if anything, if I were a retail investor in this market, I'd be very, very tempted to sell the coins into the bid premiums and wait for production to catch up and then buy the coins back when the premiums are more realistic. Again, this is not if this was a supply issue, my advice might be different, but there is no supply issues. There is plenty of silver in the market. It's a matter that the mints are working 24/7 to meet the physical demand for these coins. And unfortunately, because of that, with no coins in the market right now, dealers are taking advantage and selling them for as high as $10 over silver. And I strongly urge that you reconsider before you make that purchase. You'll never get that premium back.
Peter, has it happened in the past that mints have put pressure on distributors to lower premiums?
Yeah, I think it has. And again, I'm a little vague on the year. It may have been 2011, may have been 2012, but there was an issue with the U.S. Mint, again, either in 11 or 12, where there was an issue with production on the Eagles. And some of the distributors that were getting Eagles were jacking up the premiums to absurd levels. And my understanding was that they received a communique from the Mint suggesting that they needed to be more rational in their pricing and try to accommodate clients that wanted the Eagles. I mean, I do not think it's in the interest of the mints to have their premiums for bullion type products be distorted because of production delays. And I think that's where the dealers have to step in and at least be reasonable with the premiums they charge their clients.
Peter, finally, do you think the worst is behind us? Have we seen the lowest of the lows?
Well, yeah, I mean, Tuesday of last week was the capitulation phase. And that's when we suggested that you might want to enter this market from the long side. Is the trend finished on the downside? The jury's still out on that. And the reason I'm a little nervous on that is I want to see the U.S. dollar cross rate against the euro and the yen. What's happened with the yen is that you've had a lot of margin calls because of the volatility in their bond market, which has created a situation where, again, when you have that type of a drop and you get margin calls, be it in the Japanese bond market or in the U.S. equity market with the drop last week, the U.S. equity market had one of its worst weeks for the past 2 years. People need to raise cash. And unfortunately, precious metals are still the place they go where they raise short-term cash. So I'd like to see those markets stabilize. And I think then I'd be very comfortable saying that I think we've seen the low for this year in both gold and silver. So if you're asking for a yes or no, I would bet about 80% that we've probably seen the low for this year in the gold and silver market.
Peter, thanks for those thoughts. We'll see you next week.
Okay. We'll see you then.
And thanks for watching this edition of For Pete's Sake. You can email us at newsfeedback@kitco.com or follow this conversation at Daniela Camboni. Thanks for watching.